The sort of classic sort of tenor at the moment in particularly sort of in the venture community and the podcasts we all listen to is I could whip up a payroll system in an afternoon using, Claude Code or Replit. That thing will work. I can use an open source machine that will give me the taxation rules for a European country, and off I go. That is pretty hard, right? We know that's pretty hard for many reasons, right? There's a whole bunch of judgments based into some of those assessments. There's a whole bunch of habit in terms of the way people do things. There's a trust factor, which is obviously huge in terms of how people use the product, where they're really going to pay people, how the tax office gets notified, all those things.
Welcome to Orbit, the HG podcast series, where we talk to leaders and hear how they've built some of the most successful technology companies in the world. I'm David Toms, Head of Research at HG, and in this special episode, I'll be interviewing HG's Chief Investment Officer, Matthew Brockman, to talk about the future of software in an AI world. Matthew, we're sitting here in February 2026, mid-February 2026, because days seem to matter now in the public markets. What's going on in software?
Lead in with a big question. We can talk about what's happening in technology and we can talk about what's happening in the markets that obviously value software. Maybe if I start with the latter, because that seems to be the most sort of immediate topic. I think you're at an interesting confluence between the sort of sustained momentum of the model codes and the sense of IPOing model codes and some of the applications that have been built on the basis of that technology, and a real sort of sense of excitement about what the potential will be. I would still characterize it as that. It's evident in some areas like coding and so on, but there's a lot of areas in application where it's still coming, frankly, versus what's been achieved. Versus the counterfactual for existing SaaS, where people are looking to see what the reaction is going to be. Like, what are the AI products that are going to get built? And that at the moment is a sort of almost a bit of an unproven sort of negative. How do I know something which I haven't yet evidenced? So you've got this sort of sharp sell-off, frankly, in the public markets for existing software, complemented with continued excitement, perhaps peak excitement, dare I say, for sort of, what the model capability is and where that's going to influence enterprise software in particular over the long term.
And do you think that there's an element of catch-up going on, that there's been a lot of progress for 3 years and people have only now realised? Have we passed a tipping point?
I think there was some degree of an acceleration in the model capability during the latter part of last year, and it was some of it was around obviously compute and data, and a lot of it was around sort of the learning process for the models. And so I think with the Claude 4.5 release, and same with OpenAI, and then the 4.6 release, people have seen the performance of that step up meaningfully in application. So I think there was always an expectation, certainly in HG, we had an expectation this was coming, and you would see this kind of level of performance arriving. The question was kind of when. And so when I talk to people in our team, and I talk to people in our portfolio companies, the sort of capability, particularly in software development, but obviously that will then start to cascade into other applications, has sort of meaningfully stepped up, really even in only those periods. And so I think the sort of catalyst, if you like, for recent events has been that on one hand, and then sort of announcements, if you want to call it that, from Anthropic and others on co-work and these sort of collaboration spaces where essentially it's trying to make it easier for the average executive in a company to essentially build agentic application. And I would say that's still early to know exactly how that's going to play through, but that's what the market is trying to interpret, and then comparing that with the news and information it's receiving from its incumbents.
I guess one of the things I've noticed is that as the models have been getting better and better, one of the things they've been getting better at doing is using other software themselves. So does that give us a hint as to how software might evolve over the next few years?
Obviously, you can talk about the amount of sort of data calls and how much stuff is being taken from existing systems, and that's going up exponentially as these sort of agentic tools are gradually being rolled out. It's very difficult to build an application in an SME or in an enterprise that doesn't access existing information, existing data. This is obviously where a lot of the moat comes from for the incumbents. And so it's difficult to think that you're going to build agentic tools which have some degree of probabilistic thinking, a lot of intelligence, but a lot of it is probabilistic. That's not going to interpret the actual determination mechanisms of software and the underlying data of the software, and frankly, the workflow that's been built into software for many decades in many cases. This is a familiar set of patterns of behavior in many industries, which reflects the characteristics of the job that's being done.
And if we look at pace of change, and then you take sort of all those established systems, one of the things I've observed as well is that we're 3 years on from sort of the original GPT launch. Actually, the number of AI systems that are capable of writing to any existing system seems to be vanishingly small. They can read data out in some cases. In most cases, they're working off a knowledge base. So do you think we get to a point where AI can actually do anything? Are people actually going to let it access a payroll system and make a change to a payslip?
I mean, this is I guess the key question, right? Which is, are you going to allow new systems that somebody's built? The sort of classic sort of tenor at the moment in particularly sort of in the venture community and the podcasts we all listen to is, I could whip up a payroll system in an afternoon using, Claude Code or Replit. That thing will work. I can use an open source machine that will give me the taxation rules for a European country, and off I go. That is pretty hard, right? We know that's pretty hard for many reasons, right? There's a whole bunch of judgments based into some of those assessments. There's a whole bunch of habit in terms of the way people do things. There's a trust factor, which is obviously huge in terms of how people use the product, where they're really going to pay people, how the tax office gets notified, all those things. And it sort of assumes also, I think, that the existing providers of that capability, the existing software companies, which, at its crudest have been portrayed as sort of, electronic filing cabinets, don't do anything. And they sort of sit and wait and see how this plays through. And then we all wake up in 5 or 10 years' time, and it turns out that actually that sort of Replit-fed agent or the Anthropic-built enterprise tool is doing all of the work, and I'm now just a kind of dumb database of, some old payslips.
So I guess if we look forward in software, 5 years, 10 years' time, what do you think an enterprise software application, what does a winning enterprise software application look like?
I think it's critical that you do have existing software building into the agentic layer. So I think the prospect that the capability of AI does not end up essentially at least augmenting and frankly substituting labor in many applications is real, right? And you hear that spoken about by a lot of very, very smart people. It's going to take time. This isn't something that happens in 6 months or 12 months, as I think we're evidencing. But over the course of 10 years or 5 years, so if you went us to 2031 or 2036, are a bunch of those jobs being fulfilled by accounts clerks or payroll clerks or anybody in a kind of white collar role, frankly services roles as well? I suspect a bunch of that will look very, very different. The opportunity for an incumbent software player is to say, how do I use my existing data advantage, distribution advantage, domain knowledge, and its deterministic nature, the fact it actually calculates, to essentially start to build into that agentic layer. So how do I build in the workflow that can be substituted for the human? I was with one of our portfolio companies this morning, which is just launching agentic stuff into their customer base. And one of the things that customers is very quickly looking to do is say, look, I have several hundred people dealing with processing invoices. I can pretty much automate that with your product, but I need you to deliver it for me because I need reliability, I need quality, I need the existing processes, I need existing data. It's not something I want to build myself. It's not something I really want one of my techies building with some Replit code. But I do want somebody to start thinking about how I could take, a couple hundred heads out of that piece of functionality, because actually invoice matching, reconciliations, posting, emailing is pretty automatable. I can see how that can be done now. And that probably wasn't doable in quite the same way even a year ago. So the pace I think of that, and what we've obviously done a huge amount of work on, is say, how do we both encourage our companies to grab that, but also encourage them to, spend money, adopt product, build capability so that they're moving on that very quickly. And I would say that's been the urgency we've had to really fire up within the portfolio.
So what do you think's changed about what you're telling the portfolio you want them to do versus a year or two ago?
Yeah, it's a great question. So I think a year ago, as you know, we have an event every year in about this time of year where we go to Menlo Park and we try and expose ourselves to the very latest. And it's not that, it's not the only event, but it's a way of trying to really get crisp. Last year, a lot was around experimentation, which is sort of understanding potential, trialing, testing, seeing what the art of the possible was with a sense of kind of what was likely to happen. This year, very much more around, you can now see what's happening. You can see adoption in some of the most advanced sort of use cases, obviously in coding being one, customer support and a few others being there. You can see how that sort of application is going to play through, how people are going to build tools that work, how you do see some prospect for labor substitution now, but which is going to grow over time. And if you're not essentially building product, re-engineering your business to think about, AI first product build and product development and customer engagement, amount of money you're spending, capability of the organization, and I would say a very product first mentality. Like, how are you thinking about what the customer might do with this product, what they need to see from it, how you build it with them, how you put that back then into the core product so that it can be deployed amongst other customers with the same set of products, the same set of problems. I'd say that is the theme that we pushed on very hard. And it is taking an adjustment. I say I was literally with the company this morning and then saying, well, actually, we are going to spend a few extra million euros this year on AI build in a way that probably even 3 or 6 months ago they've been very reluctant to do, because we're encouraging them to think about what that's going to look like, and they're doing it with their customers.
And those are two quite interesting comments within there, because when you say product first and you say you're investing money, product first kind of means EBITDA second. So to what extent are you giving management teams the license to say, yes, you can go and spend some money, we're prepared to see investment go through, and maybe you miss the EBITDA numbers?
We stood up on stage in Silicon Valley 2 weeks ago and very clearly laid that out. We've been laying it out for a while, but we want to repeat the prospect, which is this is a point in time to think about how your product development, your product augmentation can change, and you can set yourself up for that 5 or 10 year view. If you are not investing money now, and like real money, not like a few thousand for some licenses and a bit of Claude and this, that, and the other, but actually I need developer teams, I need to think about go-to-market strategies, I need to think about pricing architectures, a bunch of work I need to be doing now. If I'm not spending that now, then I do have the prospect I could be behind in 2 or 3 years' time. Because this will move, and this will move quickly, and it requires, I think, a forward-looking CEO, but also a forward-looking product department, tech department. And that's where we have to have that sense of urgency and that willingness to invest.
And do you think it's quite important that we're also prepared to be wrong at stages in that process? I'm just thinking through our own evolution within HG. I mean, we went all in on one large language model 2 or 3 years ago. Then 6 months later, we switched to another one. And then 6 months later, we switched back. And now we have both of them. Do you think that experimentation has changed people's attitude or the preparedness to experiment?
I hope so. I really think we've tried to send a message of experimentation and trial is going to matter. I think if I think across a number of the portfolio companies I've interacted with, there is a huge amount of experimentation going on. They are talking, very closely. They've got CPOs and CTOs talking to their customers, understanding what problems customers might want to solve, what agentic workflow would look like for those customers, which particular pieces of their workflow they would like to essentially replicate via software, and they want that in front of them kind of now. And it's a matter of months for us to deliver that, even if, in many cases it's already there, but even if you started today, most of those companies could deliver something within a month or two that is a proxy or a trial for what could be done, and then you're into rollout. So some of that stuff will work great, and some of that stuff will come with teething problems, and so it won't be as effective in substituting activity or increasing the value of the activities it might have been. But it's hard to see that over the medium term, 1, 2, 3, 4 years, it doesn't have a very meaningful impact on the value of the software and how much of the value of the software spreads into the overall workplace.
I guess when you talk about sort of it being quite easy to get early prototypes to market, and the reality is that's kind of been the story of software for 20 or 30 years. You can get a prototype in a customer's hands quite quickly. Getting a working production, regulatory compliant, maintained piece of software out there. I mean, it's that famous quote from 20 years ago, free software is like a free puppy. I prefer to turn it into teenagers as a parent of 2 teenagers. I know you're in a similar position.
Yeah.
Anybody wants a free teenager, they're welcome to one. But how do you deal with the process of actually keeping the software going afterwards?
So much of what I hear is we can build a prototype or a product version which customers are interested in doing. They can see how it improves the value of what they're doing in an enterprise, but they are worried about the governance process, the security of it, how it deploys against other requirements, which is why I think a lot of the value does come from the knowledge of the workflow that you support already. Like you already sit there, dealing with with a filing or a payment or something which is regulated, which has to be correct, where there's a representation probably from a CFO or from an auditor or from a professional which is represented in that sort of activity. That's why it matters so much, I think, that this sort of capability is built on top of that experience and that knowledge base and not in substitute. It's such a difficult thing to naturally substitute quickly.
Yes, that's something we talked about in the podcast with Professor Lawrence, and I know we talked about the AGM with him as well, the whole concept of accountability, that we are selling to people who are accountable for the outcome of what they do. And that accountability, whether they're a lawyer or a medical professional or an accountant, in the end, they own the output.
Yeah, so much of the workflow that you can see happening here is the sort of the volume activity, right? The invoice cross-checking, the payroll processing, the data entry, a lot of that stuff is, there are many thousands of people employed in those roles, as we know, and most of them are working on software that we, a lot of our portfolio ship. So there is huge potential to make that much simpler and much easier in the same way that it has been in coding, right? You can now run an instance of Claude for, a day, and it produces very high quality code. Even 6 months ago, that was an hour. And so the productivity effect, I think, is very pronounced, and we got many examples. How that then flows fully into the workflow and fully into the final process that is then signed off by the CFO, by the auditor, by your tax advisor, by your lawyer, by your senior lawyer. That's the deployment effect of what we're trying to see with the portfolio companies.
And I guess we've covered quite a lot of things that go well, the positive attributes and so on around software. What about the flip side? Where are the challenges? Where can this go wrong? Where can software lose in a battle with AI?
If you're shipping a product which is really very much a workflow, so essentially if you're not sitting on much incumbent data, much incumbent knowledge, you've got a more sort of verticalized go-to-market, but the actual product you're shipping is relatively broad and generic in its application, and it's in something which is relatively or less deterministic, you are exposed. Right? And you can sort of see it in the markets. I mean, markets have been pretty extreme in the last few months, but before that, you can start to see some categories where there was a sense of, this doesn't feel that hard to substitute because of the characteristics that are built into what the product does. So I think there's a set of categories there. I would say any software company, any workflow that is not taking this seriously and thinking about how it develops its processes, how it thinks about product, how it thinks about its organizational structure, it won't be immediate, but in 5 or 10 years' time, we'll be in some, we'll lose value, right? There will be, the one thing we have seen, I guess, in particular in the last, months is the cost of building software is now zero or very, very marginally low. And so the prospect that I can experiment, build stuff as a new entrant, as a, the classic sort of person in a garage or an adjacent player in a market space, which is just adjacent to where I naturally operate, or I'm a large enterprise saying, well, actually, I can spend some of my own money and build some of that functionality. And I may choose to do that in certain parts of my activity, and I may not choose to do it in some of my back office. That competitive dynamic, I think, is moving. So on one hand, there's this great opportunity to increase the value, think about how it improves productivity and labor and so on. On the other hand, I think the competitive environment will evolve. Like, it has to become more, there's more activity, more action in just within these ecosystems.
If I look at the 3 particular areas of pushback I get from our investors, I'll run through all 3 and then maybe we can pick them off one by one as to where they see potential challenges or where they ask us a lot. The first is whether vibe coding, so what you've just talked about, can anybody in a garage now vibe code the latest ERP system? The second challenge we get is around spend displacement, which is, if money is being spent on AI, does that mean it's not being spent with you? And then the final challenge we get is, what happens in the new world, even if deterministic software, if payroll, tax and accounting and so on remains, but what happens if the user interface has switched to being a large language model? So you are simply an API call from everyone else's piece of software. So we kind of run through those. Vibe coding, you've just touched upon, but are we going to see an impact from vibe coding?
We haven't seen anything so far. What I would say is, I know that there are, CPOs and product leads and CTOs in our organizations using vibe coding to wireframe something for customers that can evidence what a product could be and that's in the sales process. That is not in production, right? That is leading to a decision around a product to be properly developed. Now, it can be developed very quickly because the coding agents are there, but it's being used in a way which is advancing the customer engagement, the customer understanding of what's possible, and also, frankly, some of the economic decision around how much are you going to pay me if I go build this thing. So that's where I see it happening. It's, the apocryphal, I built this in an afternoon and it can, that you can do that stuff. And there's plenty of smart people out there playing with this stuff. And it is very powerful. I don't want to take that away. But you still ultimately got to go and deal with complex customers who want to be regulatory compliant, who have had business processes, who employ thousands of people, who need organizational change, who have existing data migration. So, there's a bunch of stuff in there which is just a natural moat, if you want to call it that, for how quickly something can be whipped up in the garage and sort of rolled out.
When I talk about vibe coding with our investors, I tend to pick a pain point that they're all aware of, which is something like writing quarterly reports, which frankly is a bit painful for everybody who has to do it. And I say, if I give you an AI tool that does that, would you use it? And the answer, of course, is yes. And I say, okay, well, if I need to give that AI tool access to all of your portfolio data, all of your customer data, and all of your internal specifications and all of your views on the market and so on, I want to give all of that to this new startup AI tool, and immediately say, well, there's no way we'd allow that. It needs to be coming from those tools to do the quarterly report. We don't want to put all that data into something else. But clearly, if it isn't delivered, in the end, customers will start to trust those tools they will build ahead of steam. But right now, as soon as you start talking about interfacing to existing data, people immediately start to get worried, at least at an enterprise level.
Or you need to manage the instance of the model that you're using. So maybe using an older version of the model or an open source version of the model, and it's doing a very specific application. It's not using a very broad definition of what an Anthropic model might be. It's a contained use case because the data integrity, the processes need to be controlled, and there needs to be a high degree of predictability about how that workflow is going to actually deliver.
Yes. And I guess it still leaves you with all the same problems that a traditional software vendor has, which is you still need to integrate, you still need to get permission from IT and so on.
Yes. Yeah.
So I guess on the second one then, displacement of spend. Are we seeing that? Do you expect to see it? Where is all the money that Anthropic and OpenAI, or at least all the revenue that they're reporting, coming from?
I think we've seen some effect of this. I don't think it's huge. I think it's a couple of points of growth. But I think it's probably flattened out. So I think it was a pattern over the last year or two where there was a great sense of urgency in many enterprises and SMEs to essentially say, we've got to be in AI, you need to experiment. But, at a point in time where you're going to 500K, that meant you were going to buy a bunch of Anthropic licenses and put them in through your organization, when that was coming down from the CEO who insisted that was going to happen, somewhere in the budget that was going to get found. I don't think it was a particularly huge effect. You've also got, frankly, just the effects of, the labour force has been coming back off of the COVID bump, right? And so there's other things in that trading, which is noise, as well as this particular effect. So I don't think it's been very pronounced historically. I mean, the key call really is, as you go forward, if Anthropic is going to go from, whatever the numbers are now, 20 odd billion of revenue at some point and growing and IPOing at $1 trillion, that spend has to come from somewhere, in theory. The question is, how do we extrapolate that and really think where that matures to?
Yes, I guess the ultimate question for most businesses will be whether this comes from the labour budget or the IT budget.
Yeah, my view is the numbers for investing in Anthropic, for OpenAI, for frankly even some of the application, the more directly application businesses that are AI first, the return on the valuations doesn't work if you don't access the labour market. Like, you can't make enough economics out of the software provision in some of the ERP categories if you're Anthropic, or in some of the legal categories if you're Harvey, unless you actually do access labour. So at some point you need to persuade lawyers to employ less associates and to charge their performance in another way. That feels to me like an absolute must if those businesses are going to justify the kind of valuations that we're seeing. And that's clearly the fundamental bet that people are taking, right? Which is most of these sort of application markets are, even relatively bounded, right? They're not huge software markets. You've got to break out of that, I think. And I think this year in particular is the year we're about to see whether this really works, right? We're saying we've got this sort of enormous sense of the power of the technology and the hype and the sort of cycle of what's being developed. And now, and I think a lot of that was early adoption, people trialing, people saying, well, I need the licenses, I need it in my organization, I can sort of see it working in coding, I think it maybe could work in other areas, but I need my teams to be trialing and experimenting. And when we look at some of those companies, they've done very well. They've grown incredibly quickly because pretty much their entire market has adopted them in one go. Like, they've gone from 0 adoption to 100% adoption in 24 months. So guess what? They've grown super quickly. But a lot of it is still trialing and testing and experimenting. And now you're starting to build workflow in some of those, even the most mature categories for some of these applications. And there aren't many right now, right? It's mainly legal and a couple of others. I think the question is, what products are really being built and how are customers really adopting them, and what is that really going to do to take you from spending $1,000 a year or something to $10,000? Like, those economics need to play through to get, I think, the return on some of the investment that's happened.
There's quite an important point in there, because we've both been doing this for quite a long time, and if I go back to sort of one of the previous massive technology adoption waves in the early 2000s, it was quite hard in the early days to distinguish the true winners from the apparent winners, because everybody's revenue was growing nicely. Some people were shipping product and some people were just shipping quite a lot of services while they tried to build the product underneath to justify it. Do you think we're seeing some of that going on in the AI world at the moment?
I think you're definitely in some of the application areas. I sense is there's been this enormous growth, but a lot of it is this super rapid adoption of a basic sort of capability that people are now trialing and testing how it works. And the bet from those players and they're supportive, some of the customers who are supporting them, is we can build workflow out that is ultimately going to substitute labour, and that will justify the economics. And that's the cycle we're now in. There's an interesting point on sort of, revenue, how much how much dollars per lawyer I get to achieve if I really roll out. There's also the sort of the input costs and some of the gross margins and what does it really take? Because you've got a situation at the moment, I think, where a lot of that venture money is almost subsidizing the inference costs of, the users, right? And at some point, and that's working because it's getting the growth, but at some point it has to turn into economics back to the investor. And again, I think that calculation is quite bound up, right? You need ultimately this product to be very valuable to both sustain the growth and deliver the maturity of where these businesses are projected to end up, but also, frankly, to pay for the capability which is delivering the service in the first place, or the product in the first place.
Well, you could probably do another whole podcast on the circularity of revenue in the industry, but we'll skip over that one for now. When you think about our own portfolio, how do we get our share of that? If there's an opportunity to get into the labour market and there's a big pool to go for, like all the AI native companies are implying, or their investors are implying, how do we get our share of that?
There's how do you set your organisation up to be AI first and understand what a sort of AI built capability really looks like. There's then a serious amount of work with your end customers saying, here's what we now think we can do. Here's what we think our product can do, which is beyond software, which is beyond processing or data collection and verification and calculation and delivery. Here's how we can automate the process that the user is doing. And that's where we're pushing very hard, right? So certainly most of the companies I've interacted with are spending a lot of time with their customers. They're spending a lot of time to understand what the workflow is, exactly the workflow that those customers are using. And obviously they start with a huge head start because that's what they've been shipping for a long period of time. And they're saying, okay, using that capability, what could I build for you that is delivering some of that? And how might you think about access to data, governance, security, supporting me in developing that? Because there's an economic interest in you as a customer doing this with me. And then if I build it, how do we think about the compensation and the economics of that? So I think there's a huge amount of focus on that. And I see a lot of companies in that space right now, either with products in market or basically building products or testing stuff. And obviously we've invested very heavily in our business in what we call Catalyst, which is a bunch of developers and product capability to accelerate this in our companies, right? So we have people we can parachute in to accelerate this process, to give enhanced capability, which isn't on the company's P&L, frankly, it's on ours, but which accelerates that capability. So I think there's an enormous amount of focus there. And then I don't want to take away from the operational piece, which is just understanding that an AI-first software company in 2026 has a very different profile in terms of how it manages its products, how it manages its developer organization, what its developer organization looks like, what its sales organization is probably going to look like, what its commercial proposition to its customers is looking like in terms of how they get paid for their product. All that is moving as well. And that comes from the CEO. If you have a CEO who fundamentally understands, is building, is trialing, is experimenting, is developing their organization, again, all of that sort of capability translates as well. Because I think one of the things we have seen, just to be frank, is you can put developers in and start building product very quickly, as we just talked about, right? You can get something that customers are interested in, and you can probably get it to market and start earning some revenue from it. How it then deploys at scale, so you're now shipping it to 1,000 of your customers, not one of your customer. How are they paying you for it? How does that economic balance feel correct? How is it going to evolve over time? How does your sales organization move from basically selling a product or selling a SaaS product, which is sold on an annualized basis, and they kind of earn their commission, then went off to sell another one, to, all right, now this feels a bit more at the moment like a sort of solution sale. Like, how am I going to solve a problem for the customer? And then how do we think about productizing that? And then how do I think about getting paid for that? That is quite a big operational shift for companies, which I see a number of them have done, but a number of them are really working through right now.
And all that talk of customer probably sort of brings us neatly on to the third point of where does the customer relationship sit in the new world? If the customer is interacting with an agentic layer, is it the agentic layer that sits with the current software systems? Is it a completely separate agentic layer? Is it OpenAI? How do we think about that?
I think in the vast majority of the companies that we invest in, which are largely, SME, small enterprise, and deal with sort of back office, sort of compliance style of applications, it will sit with the software layer, right? There will be a very clear use of agentic capability, and they'll be accessing models and capability in various ways to provide the capability. But ultimately, this is a lot of software that doesn't ultimately, make your beer taste better, right? It doesn't ultimately make your business function better. And there's still quite a lot of domain in it, and there's a lot of data in it, and there's a lot of knowledge base built into it, and there's a lot of externalities in terms of how you interact with, the physical world or with other providers or other systems. And so it's possible if you're very slow as a software company that you get displaced, that somebody comes in and displaces you in some way from below or from the side. But I think if you've got that incumbency, I would be very surprised if most of our companies, if they act quickly and with deliberate intent, they will become the natural agent provider. Like, why would I not be working with an agent in that way, even if it's interacting with another agent in some way in the future, to instruct that process?
Yes, I was talking about, I suppose, a similar angle on this earlier on today with one of our investors about something as simple as invoice ingesting, which you can do very easily with your ChatGPT or almost any LLM. You take a photo of the invoice and say, extract the key forms from this and so on. You can do it pretty much for free. Yet most of our companies are having quite a lot of traction offering document and invoice ingestion into the core application as a paid for module. So typically customers are paying a premium to have it integrated into their core system, even though they could go somewhere else and get it done by a third-party tool.
I was with the portfolio this morning, and they do a lot of ingestion of this kind of stuff. Would they rather we did it at some economic payback, which is it costs us very, very little to provide the service, but we have it within our process, within our governance structures, within the deterministic process that we would naturally follow, looking for exceptions, errors, tax reporting, whatever it might be? It's a natural decision for someone to say, well, I'm opting into that as long as you can provide it to me. If you sit on your hands for 3 years and I feel like I'm losing traction, well, I will go somewhere else. But if you're providing it for me and you're telling me how this is going to work, and I can see this works, and frankly, it's a part of my business, it's a part of my back office, but it's not my absolute day job. This doesn't make my entire business work better, it just makes it work a bit less efficiently. I think it's an obvious proposition to go to the incumbent, as long as the incumbent is building.
And are we seeing proof points of that coming through the portfolio in terms of product launches and so on?
Yeah, I would say so. So we have well over 100 projects that we've supported as HG in the portfolio, and I would say there are real revenues coming from many of those projects, and then we have a whole load in build. And it is that theme. There is something that is now doable with the technology that probably wasn't doable 2 or 3 years ago. The customer is keen to evaluate and develop it and build it, but they're looking for their existing technology provider or existing software provider to think about how does that get built and deployed in a way which is consistent with how they've always, how the business operates.
And if I think about what all this means for us specifically as HG rather than the industry broadly, from a capital deployment, from an exit perspective, as CIO, how does it affect your thinking about what we invest in and what we don't invest in?
My main focus at this stage is how do we recently completed a fundraising cycle. How do we reflect what's happened? And I think the key thing we're looking for is a bit of patience, right? So we're not someone who's going to try and call cycles. We are going to try and patiently build technology companies. I think there's a huge opportunity in the next 5 or 10 years for us to build some very successful technology companies. In many ways, our sort of competitive set, I think, will actually start to thin for once. Like for the last 10 years since I've been doing this, like every year we have more competitors because more people go, oh, I like being in SaaS software. I should definitely have a team that does SaaS software and they should definitely do some deals. And actually that might start reversing a little bit, which would be quite interesting in itself. But I think what we need to do is then think in the next 3 to 5 years of that investment cycle, how do we see these patterns emerging? What capability do we need as a business to not only identify businesses that succeed in this world, but then how do we work with them over time to build this out? Because I think a lot of what we will see in this point in the cycle, and I'm saying the next 3 to 5 years, is a lot of our skill will be around finding companies that are in these market spaces that have got inherently strong products that could have the opportunity to build and gain economics from deployment more than frankly sort of financial engineering by Excel at Y. Like this is the moment when this kind of deep understanding of markets and products and company organizational structures really counts. Yeah, I would say our confidence that these kind of the long term, and I do think this is 5 or 10 years, not 1 year, 2 years, our confidence over the next 5 or 10 years of the power of this technology and what it's going to do in terms of automation is huge. And we already have some proof cases of where we have essentially built product and deployed products in market and it's being paid for by customers, and that is only going up one way at the moment. So I guess we're investing real money in 2 ways. We're asking our portfolio to put, millions of dollars into this product stuff actively and thinking about how it frankly impacts the P&L as a result, but to not worry about it or to not take it as seriously as they would have done, previously. And we spent a lot of money of our own P&L on saying, how do we have this capability in-house? How do we deploy it? How do we get it in action quickly? And I would say probably across both of those sums, we're talking, hundreds of millions of dollars, of basically of saying, look, there's commitment here in terms of just how much we're going to focus on this across all of that activity, across the whole of HG, 190 billion of enterprise value, whatever it is. That's what you'd be expecting us to spend, I suspect, if you're really thinking about what can be done at this stage.
And I guess we may have a slight intrinsic bias on the sort of private versus public debate, but what you have highlighted there is an advantage not just of us owning private companies and being able to pivot them quite fast without recourse to analysts and investors to explain why the EBITDA is not going to make the target this year, but also as a private business ourselves, how we can take the call to invest tens or hundreds of millions of dollars of, frankly, your and the partner's money into activities like this.
Yeah, I distinctly remember going to our board and when I was CEO 18 months ago, asking for some money to hire some software developers to work with Chris Kint and his team in our organisation, and being given a very sort of quizzical look by my fellow board members, but being basically given the sort of license to go hire. And that turned out to be a very, very good idea. And it wasn't my idea, it was Chris Kint's idea, but it was a very smart thing to do at that stage, given that we were now going to accelerate this. And so I could afford to do that because I didn't have a public stock and I didn't have a public earnings target that I had to hit, and I had flexibility, and I think that actually catalyzed our program, right? We call it Catalyst, but that was the kind of origin of like, shall we go and try this and see how well this works? And now we're doubling, tripling up on that as quickly as we can.
Yeah, so rapid decision making to address an expanding TAM and a big shift in the market.
Yes, yeah, and the flexibility to do it.
Yes, yeah. So in terms of sort of bringing some of this to a close, I was thinking through AGI as one of the themes that gets talked about a lot, sort of the rush for AGI. And clearly in the last few years, we've seen software go through the Turing test in a very impressive way, a test which I remember from my younger days in coding was viewed as quite a difficult target. So I was thinking through what would be a Turing test from your perspective if you're looking at this world? How would you determine that we've actually got there, that this is now an AI first world in everything we see?
Well, I'm entertained a little bit with some of the commentary in the podcast around, could you build $1 billion company with one person? And obviously this is a great sort of idea that at some point that can be done, right, with the power of AI. And I was thinking about it in the context of, could I raise $1 billion fund with no people in it? So and I went to investors and said, don't worry, there's a virtual Matthew, and there's a virtual set of activity, and there's a virtual team which are going to deploy all of your capital for you. They're going to monitor at the board, and then they're going to work out the exit. I think that would be the ultimate sort of PE, HG, Brockman, Turing test of whether this was something that investors felt comfortable to say, we're not looking you in the eye, Matthew, we're looking you in the eye that you believe the model is good enough to do this. I don't know if that's a good answer or not, but
that's quite impressive. I mean, of course, you could argue that maybe we've got to that point when people watching this aren't sure whether we are avatars or real, but I can assure them, for those who are watching,
I'll pinch you, Thomas.
Yes, exactly. Yeah, this is very much the 3D Matthew. Yes, my own version of it when I was thinking through it was, I think we've got to proper AGI at the point at which Sam Altman is prepared to get in a plane which has been designed entirely by AI software, fly to 10,000 feet and jump out wearing a parachute that has also been designed entirely on AI software built by one of Elon's robots. At that point, we'll know we can really trust AGI with everything. Until then, I think people probably want their tax return or their payroll having some degree of human oversight, even if there's a lot more automation of the process.
And their pension investment money that they would like us to look after for them carefully.
Correct. Yes. The accountable Matthew is the one that really matters, not the virtual one. Great. Well, thank you very much for your time, Matthew. It's been a very enjoyable discussion, and we look forward to seeing more of you on future podcasts.
Thanks for listening to Orbit, the HG podcast. If you'd like to find out more about HG and our work building enterprises that endure, subscribe to our monthly update at hgcapital.com/monthly-update.